any car company can do electric cars, but to do them at scale in a profitable way, ultimately, I think is something that Tesla has a big advantage on the manufacturing side. I think that the investment case is based on what I believe is a more efficient way to move around. I think that the free end of the market, even though EVs have been in an EV winter, I think that eventually the consumer will recognize that the performance and the cost of ownership is lower on these vehicles longer term. And I think that's going to prove to be higher growth rates. I believe that we can get back to 20% plus growth because I believe ultimately electrification is just simply a better way to get around.
All right, welcome to OK Computer. I'm Dan Nathan, joined by Gene Munster. He is the managing partner at Deepwater Asset Management, and he also has a podcast, Deep Tech 315. It drops Friday mornings on YouTube. Gene, welcome to the pod.
Dan, this is no joke. One of my thrills of earnings season is always to join you right before all the festivities kick off. So thanks for having me.
You are way too kind. You and I get to see each other frequently on CNBC's Fast Money, and this is your return. I think it's got to be your 10th pod with us. We really appreciate your participation. We're going to hit all those big cap earnings. I think we have the sexy six. We know that Nvidia doesn't report until November, probably mid to late November here. But you actually had some really interesting takeaways from the robotaxi event of Tesla last week that you were at. So we're going to hit all of that. Real quickly, Gene, like how difficult is it to get to one of those events like the robotaxi event that you just participated in late Thursday night?
Now, from a logistics standpoint, it was pretty tight. I came from New York over. Flight was delayed. I got in at 5, and then 2 hours traffic, of course, famous LA traffic. And then I had a red eye back, so I had to leave the event around call it 10 o'clock, something like that. So I only got to be there for about 3 hours, and I can say from like an investor perspective who's watching the industry, these events are just golden opportunities to talk to people who are building the tech. I mean, it's to try to go and look inside some of these companies from try to triangulate who the right person is. But here you're literally in line bumping into people who are doing these things. And it's just a really good environment to learn a lot about what's going on. And so hard to get logistically there. There's a couple thousand people there. So a lot of people had the ticket. It was just another good example of, I think, Tesla doing what they do really well, which is build a lot of excitement. We can talk about the substance behind it, but at a minimum, the excitement was there.
All right, let's talk about this robotaxi event. It was on the floor of the Warner Brothers lot in Los Angeles. Like you said, there are thousands of folks roaming around, a lot of technologists, a lot of investors, and a lot of analysts. But there's also a lot of folks from the company there. Talk to me a little bit about like what the focus was. Again, we know that robotaxi was the event. We know that they brought in the cyber cab. They brought in the little bus thing. I don't know what they're calling each. You and I talked on Fast Money, I think on Friday afternoon. I'd take the over when these things are going to actually be, in circulation. But there was also excitement about this Optimus, this robot. I saw some of the videos. I saw a picture of you with it. You were doing like gang signs with it or something. We'll talk about that in a second. But, I think the biggest disappointment, one of the reasons why the stock was probably down 9%, and again, we talked about it late last week, is that really the excitement around this event would have been some sort of clarity about a lower end EV to better compete with some of the Chinese competition. So why don't you prioritize what you went in there with expectations and what you came out with, excitement and disappointment and the like?
So the title of the event was We Robot, but we thought that the only thing that really mattered relative to the robot was the robotaxi, and the we was in reference to robotaxi service. And so based on talking to other people around kind of but going into the event, my expectation was, of course, they're going to show the robotaxi and also have rides for that. That was not clear a few weeks ago whether or not they'd actually give people demo rides. I also was high probability, I would have put it at 90%, that they would have talked about the cheaper, more affordable car. Like you said, I think that that's where most investors' expectations were. And I was also in the camp that they were going to talk about this van in the minority there. And so that was kind of the setup is those two of those three. I think the most substance of those, of course, being the cyber cab and the cheaper car. So not having that announced, agree. I think that that really was kind of took some of the wind out of the sails because Elon on the previous call, that was his a topic was what that this vehicle could be out in the middle of 25. Then he said early 25, and then he laughed and said maybe even late 24. And so so that was, I think, some of the a big part of the disappointment. And then I think that there's always, I mean, all of these moving parts. I think there's just anticipation going into it, and there's just a natural letdown after it as well. But that was the really the pressure point of the letdown for the stock was related to that.
Well, listen, and you know my view on the stock. We talked about it again on Fast Money. You think it's a tech company. A lot of like the smartest folks in technology feel the same. Right now, though, it's an auto company with a $700 billion market cap, and I get it. They're making like massive investments and all this other stuff that is the future. And if you just look at this, super heavy rocket launch that they did, we're recording this on Monday, and this is SpaceX, obviously, so different company, different set of engineers, same CEO. They were able to take this booster and bring it back on the pad that in which I mean, it is truly amazing. But when you think about the technology on the Tesla side, some of the biggest advancements happened 10 years ago. I mean, when you think about these cars, they really haven't changed that much. The battery technology hasn't gotten that much better. They're not in this fast fashion sort of situation like many of its Chinese competitors. You could also make the argument that, Elon, at least the C-suite over there at Tesla, has made some really major mistakes. Going back to April when Reuters was reporting that the company, was going to kind of really move past this lower end EV and go all in on robotaxi. And I think this is what you're kind of highlighting.
Right.
At the time, Elon just basically said that's not the case. That's why one of the reasons why there was expectations of this $25,000 car, especially at a time when Chinese EVs are taking a lot of market share globally. Not obviously here in the U.S. There's lots of talks about tariffs. They've been in this, this pricing war that has not benefited the company at all. They've been buying down rates. They've been lowering prices. So to me, it just seems like this story is kind of stuck in the mud, despite the fact that the stock is way off its recent lows. It's trading about 220. It traded as high as 270, but as low as 140 earlier in the year. So when you don't have all this sexy stuff like robots and EV or EV fleets of autonomous vehicles, to me, it's kind of disappointing. And when you talk about the company and their deliveries, I mean, 85% of their sales are coming from the lower end 3 and the Y. So they basically saturated the high end, maybe other than, whatever they're selling in Cybertruck. But I expect that to plateau fairly dramatically. I think it was kind of some of those early fanboys, and it's like the MAGA crew are getting all up in that thing, but I don't think it has like sort of mass appeal. So to me, the story, and then the other thing on margins is that if the Chinese are going to continue to kind of flood the world with $20,000 EVs, and we're going to have massive tariffs on these things coming into the U.S., the price war doesn't really abate. And so the company is kind of stuck in the mud until they have something that's 25,000. And let's be clear, if they say 25,000, it probably comes in more like 30,000.
35, yeah, 30, 35. I'm with you on that. Um, maybe to take this kind of trying to inch us forward here is that Tesla's is in a difficult period. I mean, they returned to growth, 7% growth. They were down in the June quarter. I do want to, just before I jump in, I do want to just mention that 7% is not spectacular growth. It grew faster than traditional auto did. And that number surprised me. I was expecting that they would miss that number. I was expecting it to grow more like at 4%. And the reason is that I thought that some of the political speak was going to have a bigger impact on Tesla demand. I thought for every one person that they basically turned off, they turned on zero point 0.8 people to buy it. And that math was not in the favor of Tesla. And so the fact that they came in line, I just, the sky is not totally falling here. Like we saw an improvement in growth. Agree that the comps this year are generally going to be easier than they were a few years ago. But at the core topic for me related to the whole Tesla investment case is related to just kind of the anatomy of a car and ultimately the electrification piece. And to do electric cars, any car company can do electric cars, but to do them at scale in a profitable way, ultimately, I think is something that Tesla has a big advantage on the manufacturing side. And then we can talk about the layering on the autonomy piece and some of the around the car part. But at the core, I guess I think that the investment case is based on what I believe is a more efficient way to move around. And so I think that the free hand of the market, even though EVs have been in an EV winter, I think that eventually the consumer will recognize that the performance and the cost of ownership is lower on these vehicles longer term. And I think that's going to prove to be higher growth rates. Now, what that mix of vehicles looks like. So that's kind of the fundamental piece that I believe that we can get back to 20% plus growth because I believe ultimately in electrification is just simply a better way to get around.
Yeah, I mean, the key word there that I take away is eventually. I mean, if you think about the hyper growth that existed in this company, really obviously was at the forefront of pushing towards that. At some point, I mean, their auto gross margins look a lot like those of the companies making the hybrids, and so right now it feels like
Yeah,
that
that's fair.
a lot of consumers want the hybrid, and Elon has kind of put his flag in the ground and saying we are not going to be doing that. So he seems to be taking short-term pain, and he's okay with it for like what he believes is vision for the long-term future. So I totally understand that. I just want to be really clear to our audience. Gene is about as transparent as it gets. He obviously comes on Fast Money real time, breaking a lot of this stuff down. If it's not just earnings, but if you look at his Twitter feed, it's at Munster_Gene, and he's giving you guys his real time thoughts there. Here's one tweet that I took away, which I thought was really interesting from Friday. You said the sleeper takeaway from the Tesla event, Nvidia's got a long way to run. And so again, you had put out a thread talking about like relatively your disappointment about the event, but you come out of there saying something very different about another stock that is performing extremely well. So talk to me a little bit about how you felt about Nvidia going into that. And there's been lots of chatter, right? They're transitioning to this next generation Blackwell chip. At first, it was thought to be delayed. Jensen Huang, the CEO of the company, I think a week or two ago said the demand is insane. That was his word, not mine. So again, talk to me about your thoughts on Nvidia, because it's right back near all-time highs, Gene. It traded as low as, I want to say, 105 or something in August. Here it is back near 140. That's a heck of a run.
The Tesla jumped out to me, or that sleeper takeaway is that there's a lot going on around autonomy. There's a lot of potential around robotics. I took the bait on the kind of how long Optimus was, and despite that, I see potential in what these can be. And even if I'm wrong, on the potential around autonomy and the potential around these robots, I think that there will be a lot of dollars pursuing these opportunities. And when you talked about the eventually piece, and I'd like to say that is that investing in Tesla is a waiting game, but the eventually piece benefits Nvidia, and that is that there's just going to continue to be this investment, and I think that's what was just special about the Tesla event is, take away the parlor tricks that Elon's doing and how it was curated, what was going on with the cybercab. There's just a lot of investment that's going to go around this, and nobody can touch Nvidia at this point. We have venture investing. We're invested in some companies that are trying to compete with Nvidia. They're making progress, but it is incredibly difficult. And so I think that the concept around Nvidia, or the investor concern, is that it's going to do what Nvidia always does, which is have a boom period and then hit the wall. And there is going to be a period where there's going to be decelerating growth and the stock is going to get hit. And I think that that's probably 2 or 3 years away. So I do believe this is going to have a big pullback. But I think that for the next few quarters, where there's people like Tesla and Microsoft and the hyperscalers and governments, and what I still believe is very early in AI, NVIDIA is going to be a beneficiary in that. The punchline here, Dan, is I think if we start thinking about 2026 growth, I think the street's now at 25 or 30%. I think this can be 40% plus. And so I think it's just going to grow faster for longer.
Yeah. So fiscal 26, which is next year, and I know you're talking about probably 2 years out. So
2 years
expected.
out. Yeah, I'm sorry.
No,
Yep,
no, no,
thank
no.
you.
But it's calendar year 26. So
Calendar 26.
fiscal 26, which is next year, expected EPS and sales growth about 44%, which is fairly astounding. Margins have come in, at least the expectations have come in down to 75%. I think at one point the company was guiding towards 77, but it's trading at 34 times next and about 19 10 times sales. Now, again, to your point, for fiscal 2027, expectations for earnings and revenue growth are somewhere around that sort of 20% level. And again, they could surprise in the way out year. They could, folks could start to say they're going to hit that wall sooner than expected. But all the reasons that you just mentioned, they could all take off. I want to, before we move on, I just want to make one point is that, earlier this year, you remember when Tesla, and this happened, diverted, $500 million of the H100 chips from Nvidia over to xAI, which is obviously Elon's AI company. Now, there's going to be lots of goofiness going on between SpaceX and Tesla and xAI and X, you know what I mean, with all this technology. So maybe that's not as big of a deal. But my takeaway at the time when I saw that, maybe autonomy is further out than some think, because if you think about Tesla does not use LiDAR. You've been out in San Francisco or other markets where Waymo is, right? They have all this big LiDAR technology on there. Tesla's not doing that. They're going to rely on cameras that are going to be powered by AI chips and the like. So to me, that was one indication that they're probably further away from full autonomy. We know that full self-driving is meant to be called supervised full self-driving. And I've been in the Waymos, and you've been in the Waymos. It's an amazing experience, but those cars supposedly cost about $200,000, at least with the Jaguar, fancy SUV and all that LiDAR technology. So the question is, does it scale? Now, you could make the argument with Tesla that their idea of their fleet and using some of their customers' cars, I don't know how the hell that's going to happen. You know what I mean? Like the idea of owners like putting their cars into the fleet. But to me, that's like 5 years away. This is like 2030 stuff. So again, you are the technologist. You've been doing this in both public and private markets for a long time. You've forgotten more about this stuff than I'll ever know. But one thing I've learned about Elon Musk is take the over. And then at some point, the chickens will come home to roost as it relates to valuation. A $700 billion market cap company where a lot of things are in the offing, Gene.
Maybe we can just divert and talk about the person here and Elon and he's definitely a flawed person. There's no question about it. I'm flawed. The topic about his over under his kind of failure to predict, which I went back and looked at, is 21 times since 2014 that he said autonomy would be here on an average of in 2 years out. So to say he's missed the mark on this is an understatement. And then we look at some of the dynamics around the event this week. It just kind of builds that narrative, which makes sense. But I think there's also a piece to it, which is that he's probably been the most influential entrepreneur since Steve Jobs. And the chopsticks landing that you referred to from SpaceX, it's not Tesla, but it's the same person, the same driving force behind this. And so when I think about, like, if you'd have told me that was true, that chopsticks landing, or maybe that when the Falcons were originally doing their landings, actually the first time I did see it, I thought it was animated. I thought there's no way that actually, when Elon's running out to the pad hugging people, I'm like, this is just a total hoax. And so, but my point is on Elon is, I think the conversation should include the good things that he's doing too. And if anybody's going to push the envelope and force kind of some bigger change down the road, he's probably the person to do it.
Yeah, no doubt. I mean, listen, I said it, the other day, when we were talking about it on Fast Money. I mean, he will get there and it'll be better than everybody else. It's just the time period. I mean, if there was a private company like SpaceX and we didn't have to talk about him no, I'm being serious, and talk about the stock and talk about the options activity and talk about the ratings and talk about, they'd probably be a lot better off. He should have taken it at 420, except for the fact that I think on an adjusted basis, a split adjusted basis is probably a lot higher. Well, listen, we can move on.
Before we leave Tesla, there's one thing I wanted to mention because it's important. This is, I wish I would have remembered it when we were talking about the lower price model, but I do want to mention something is they had 20 prototypes of these cyber cabs kind of rolling around. And I think just logically to build those prototypes is difficult. It probably is the framework for what this lower price vehicle is going to be. That's my guess.
Yeah,
so,
it makes sense.
We can go on.
But the cyber cab with 2 seats, you know what I mean? It's probably not that practical either, right? So
Could be, but maybe they throw an extra door on there. Maybe maybe there is a market for I guess, two-seaters. They don't sell a lot of two-seater cars, do they? What's that, a Mazda Miata,
Yeah. No, I mean, or like a high-end sports car, but again, if
right?
you're gonna
But
do
for the
that.
average person, they're probably gonna want something to throw. There's plenty of room for gear in the back. We'll see, but keep your eye open for that
Well,
part of it.
that would make more sense, I think, for a car that's not in a fleet of autonomous vehicles, because again, it can't be like you need to have four doors and that sort of thing. At least from my experience with a Waymo.
And you're not gonna cannibalize your other cars as much
Yeah,
either if you have something that's
that's right.
really distinctive. And who's the buyer of that? I don't know, a single person and who doesn't have a lot of passengers. I don't know, but
Yeah.
it's, we
Well,
can.
let me just say one thing. I mean, like for probably 98% globally of two-passenger cars, they're probably above the price point of $100,000. I mean, they're basically
Right.
sports cars. You know what I mean? So to me, they'd be turning upside down a lot of the economics that make sense to do that. But and the last thing I
Keep
just
an
want
eye
to.
on it.
What's that? Yeah, the last thing I
Keep
want
an
to.
eye on that form factor.
Yeah, exactly. All right, let's rip through some earnings names. I know you got to get out of here pretty soon. I just want to talk about Netflix, which is coming out Thursday after the close. I know this is a stock that you've followed very closely for a very long time. So Netflix Thursday after the close is up about 46% of the year, very new, an all-time high. 2025, so that's next year, 20% expected EPS growth, 12% expected sales growth. Gross margins is something they've been going higher, and I know you're going to tell me why. 39.5% in 2022, expected to be mid 46 or so percent. Trades at about 31 times, so it's cheap to his historical self. Obviously, we had the crackdown on passwords, we have advertising, and the potential for price increases or more price increases, as you mentioned a million times over the last 10 years when they've done this. And a lot of people say, well, it's going to cause greater churn. Well, your point has always been it drops right down to the bottom line, right? So talk to me about what you're thinking with the Netflix into the print here. Anything that you would be worried about? Is the stock priced to perfection despite it being cheap relative to itself? And what do you think about those expected growth rates for 2025?
We don't own the stock, and I have some concern about what the growth rates. I think you're talking about 12% revenue growth, and I suspect that that's probably towards the higher end. And part of it is just that all the benefit that you've talked about that they've been essentially wringing out of the business. The price increases are pretty systematic, and so you can kind of count on those happening again late in 25. But the piece around what's happened with the crackdown undoubtedly has had a big impact. That's improved margins. It's like the cheapest way to improve margins is a price increase. The second cheapest is to crack down, basically turn people off of the service and have them come back. And so I think there is this piece, the kind of the double headwind for Netflix in my book is one is that you have this diminishing tailwind, a stock at near all-time highs, diminishing tailwind with the password. And the other piece is that I just think when more broadly in tech is that this is a great business. It's a sticky business, but it really isn't an innovative business. The most innovative things that they're doing is around using generative AI to improve and lower the cost of content. But just on the service itself, improving the algorithm, all of this is nice. But I just feel there's just so much more, so many bigger opportunities, bigger TAMs that you can invest in. So that's part of it. Is I think the numbers are a little rich for next year. The other part is just the opportunity cost of having one of your seats taken up with Netflix.
Yeah, no doubt. I think the innovation part is really interesting. So ultimately, we'll see when they launch some of their first, content with generative AI. Is probably first in the kind of the kids animated sort of stuff
Right.
before adults are willing to kind of take that stuff up. Let's talk about Google here. So they don't report until next week. One of the things that's interesting about Google, it seems like almost 90% of the headlines about this company, obviously, we don't really have to talk about the FTC and the potential for, what the remedies might be for that. But like from a fundamental standpoint, we've talked about some of their generative AI launches over the last, call it 18 months or so, generally disappointing. There's some recent ones on the video generation that folks have kind of gotten a little more excited about, podcast generation, that sort of thing. It's going to put me out of business. But the stock's only up 17% year to date. It's down 14% from its highs. It just feels kind of stuck here. And when you think about it on a valuation basis, there's very few mega cap stocks that trade on 2025 below a market multiple, expectations, for EPS growth, mid-teens, revenue growth, also mid-teens. Do you think the headwinds and all of the competition, with OpenAI and Anthropic and a bunch of these others, and then obviously the FTC, it just seems like, attack on their search dominance. I mean, it seems like again and again and again, there's just a lot of negativity around the story, and it's obviously reflected in the stock performance.
We own it. Deep water. It's, I think, highest of the highest conviction in terms of our positions right now. And I think that the big topic, the pressure point, as I like to refer to as going into the quarter, is just going to be related to how generative search. When you just do a regular Google search in the U.S. now, that you get those generative results. Those started on May 14th. So the June quarter, they talked about an improvement in engagement around that, and that the economics are working to their favor, that people are still selling a lot of ads. The search business grew in the June quarter at 14%, same growth as was in the March quarter. And so they turned it on halfway through the quarter in the US, which is about 40% of the revenue. So you can just kind of think that this is kind of like a pilot area in the June quarter. But the September quarter, this is going to be the big tell. Forget about all the what's going on with the Department of Justice and the Epic case and the potential breakup, because we're really not going to figure anything out anytime soon on that. But what we see in the search number, if the search number continues to be, the street's looking for like 11% growth this quarter. If it continues to be in the September quarter, if it continues to be in that kind of right around that 11, 12, 13, 14 number, I think it really, with a full quarter of generative AI, I think it should help investors just be more comfortable that this transition to generative AI and competition from OpenAI, that Google has some strategy, and that's they've implemented how to move forward.
Yeah, anecdotally, until they started adding those contextual answers, within Google, I was using Perplexity a lot, and had it kind of tuned to either ChatGPT or Claude. And now, I have greater confidence of going back to the Google search box and getting a sort of answer with a lot of the citations that I'd come to expect from using some of those other chatbots. So it'll be very interesting to see how that happens. One of my contentions has been is like I use a lot of Google apps, as you do. I think the potential for, what I think Meta is trying to do across all of their, whether it be Instagram or Reels or WhatsApp, I'm not on the blue page, but Meta AI to me seems like a real sleeper, and I want to talk about that in a second. So you think there's a potential for upside in the Google quarter, upside to the guidance, and really a lot of the headwinds, or at least some of the commentary around the assault on search, is going to be
That's it.
something that maybe you put behind you a little bit. All right, that's really helpful. Let's talk about Meta for a second. They're not going to report, I think, until October 30th, but this is one where a lot of folks have gotten very comfortable with the valuation. The growth has been great. The stock performance relative to everyone in the Mag 7 other than Nvidia has been fantastic. And so when I think about what I just mentioned, Meta AI, no one's really talking about using it just yet. It looks not too different than GPT, but built into all of the apps that a lot of folks spend a lot of time on a daily basis. Now, there's been a lot of talk about them already have made the spend, and you and I have talked about this as it related to metaverse in 2021 and 2022, and diverting that spend and a lot of their resources to building out this open source Llama large language model that's powering Meta AI. And again, I'm not a power user of Meta products, but this to me makes a whole heck of a lot of sense built within these products. Not too different than the idea of Gemini being built in across a lot of the Google products. So talk to me how you're thinking about Meta here, because again, up 68% of the year, it's only down 2% from its all-time highs, which is, one of the things I think it makes it stand out from some of the other names we're going to talk about here.
So the top line growth this quarter, it's supposed to be like 18. I think it's 18%. I think it was 22% last quarter, 27% in the previous quarter. So just big picture here, we're seeing decelerating growth rates. The difficult comps is having an impact on that. And what you described with Meta AI, them kind of basically infusing it in the fabric, they did something similar with Threads a couple years ago, and of course that created a lot of buzz, and then that just kind of died out. I think in the case of Meta AI, it's different because essentially when you use these products, it is like the search bar. If I want to search you on Instagram, I have to go into Meta AI, and they've talked about having these 500 million now plus users. Effectively, they could turn that on just like they did with Threads. So I think that this is they're just adding generative AI, very similar to what Google has done by creating generative search by plugging that in. Maybe they got the idea from Google to kind of keep people in the family, and they've done a great job of that. And I think that's one of the pieces that always continues to, even outside of the AI piece, that blows me away about this. They continue to grow their active users. It's about just over 3 billion people a year, 3.2 billion use their products on a daily basis. I mean, mind blowing types of numbers, but they continue to grow at 5, 6, 7% year over year, which I think is testimony to how addictive the products are and how well they can add things like Meta AI to continue to increase engagement. But at the most highest level, you ask the question, how do I feel about Meta? We own Meta at Deepwater. I think that there is, we have a belief that they are going to apply AI just across the board. And whether it is with Llama, whether it's with tools for advertisers, whether it's for content creators to make better content around it, whether it's through this Orion glasses and the dream around what's going on in Reality Labs. Zuckerberg, he's aggressive and he's going to apply it to a lot of different places. And pair that with our belief in what AI can do, it kind of lines up that Meta can keep growing their revenue kind of in this teens growth rate. It's not going to kind of drift down at 8%, for example, in the next year or so. I think it's going to kind of stay in that teens plus growth.
Yeah, a couple things. I mean, the Orion launch, people were really excited about that. I can't remember the last time I saw so many tech
It
geeks like,
surprised me, by the way, how because it's so far
yeah,
off.
3 years, right? So, and the prototype cost 10 grand. I'll say this: I just bought a pair of the Wayfarers for $350, which is the partnership that Meta has, and they're like just Wayfair Ray-Ban glasses that have a camera built in, and then this great. I hear it's fantastic, just the kind of speakers that they have into your ears. So we'll check back on that because I think that's a really interesting strategy. One other thing I'll just say is I think a total it's just a free option is Threads. When you talk about that and you talk about, Twitter at one point, I think before Elon bought it, had about $5 billion in revenues, and they were just totally under monetizing that platform. This was the quickest app to 100 million users because you basically, like you just said, you could turn on your Instagram feed into Threads. And I just think there's going to be a really good opportunity there for them in the future. So to me, I find the story really interesting. I find the valuation interesting. I find here's another thing, and I'm just curious. You just mentioned Reality Labs. I think I read an article in The Information a week ago that they have spent $60 billion or lost $60 billion within Reality Labs over the last 5 or 6 years or something like that. At some point, I would have to assume they get a massive return on those investments.
Or cut the spending. I mean, one of two things is going to happen. The worst thing that can happen is it can kind of stay in this holding pattern. But I think if Orion works, they're going to continue to put some emphasis on it. Over the weekend, I was going through just the market size of these wearables, whether it's what's been a disappointment around Vision Pro or what the wayfinding glasses from Ray-Ban and Meta have. And it's still, this market is really small. We're talking like 10 million less units a year. There's 1.5 billion phones. And I think that for this to go mainstream, we need something like Orion. I mean, mainstream, I'd put in the category of 250 million units a year. But this is not going to rival the phone. Just want to put that into perspective. And that's a piece that still kind of perplexes me about the level of their investment into Reality Labs. I believe that there's a category here. I believe it can be hundreds of millions. But even if it hits that, I think spending 20 billion, that's their burn rate right now on Reality Labs. Next year, the street's looking for 21 billion in losses in it. I just think you can spend it in better places.
Yeah, no, that makes sense. But, I guess if you had an eye towards building a business like AirPods, if you were Apple, I think the other issue is that, if you don't have an iPhone or you don't have a phone in general, none
Yeah,
of this stuff
I think
works.
you nailed it. Zuckerberg wants to get away from Apple as fast as possible, and he's doing everything he can to do just that.
All right. Well, we're not going to hit Apple here. Maybe you and I can pop on again. They're not going to report until Halloween, which is a couple weeks away. But I do want to hit Microsoft here because I think it fits in the narrative of everything that we're talking about here. A lot of the story, and again, here's a stock that's also kind of stuck in the mud. It trades expensive to its history, right? And if you think about growth rates, decelerating a little bit. The stock's up 11.5% of the year. It's massively underperforming an S&P that's up 23% in the year. The reliance on OpenAI is something that I think a lot of investors are kind of getting a little worried about, at least for the technology. They don't care about the $13 billion they invested in it. They're supposed to get that back through Azure credits and the like here. But, it seems like OpenAI, by the way, and I think I said this last time, it sounds like it's a dumpster fire. I mean, an absolute dumpster fire. Yet they just raised $6.5 billion at 157 billion valuation, and every bit of talent is just leaving this company, and they're going to start competitive sort of operations here. And this has just been a nonstop thing for almost about a year since that whole issue with Sam Altman being bounced or whatever. So I think a reliance on Microsoft on this technology doesn't make any sense. And you know what? Maybe it was a good thing that they didn't spend, tens or 20, whatever, $50 billion like Reality Labs has done building their own large language model. These are going to become commoditized, and they might be able to, why buy the cow when you get the milk for not free, but that's what Apple did, actually, and you and I have talked about that. So talk to me about Microsoft and where they sit here and how you're thinking about the company into the print and what we might see for guidance.
So one of the big numbers, of course, people are going to look at is Azure. The Azure number should be a clean number. I just want to remind people that they've made some changes to how they're accounting for their intelligent cloud segment. Essentially, they're going to bring some of that out and put it into their other segments. But usually, they just break out Azure as a standalone after on the call or shortly after the numbers come out. So hopefully, that will be just a clean number. But I just want to remind people there's going to be some noise. Azure, the street's looking for 28% growth. There was 29 in the previous quarter, so basically unchanged. Next year, they're looking for kind of similar growth rates. But that's obviously been a big driver to the stock. And I don't have an edge in terms of where that number is going to be for the September quarter, but do believe that kind of their general position there and the number two, they have got about 21% market share in the cloud space, still a small enough market share where that can continue to grow in the mid to high 20s. And so feel good about that. I also share some of your concerns just about their AI destiny, and Apple is rumored to have been in that round with OpenAI. They eventually did not play into it, but just how good is the relationship that Microsoft has? They're starting to build their own models, mostly smaller models now, but that I think speaks to their belief that you need to diversify away from this. At the core, if we kind of fast forward all of this through, is that their business grew kind of before the AI lift was growing at 8 to 10% year over year. And it's been more like 14% recently. And that's kind of the expectations. And I think that's just the growth of the company is this 10 to 15%. And with all these good things with AI, I don't see this as being a breakout type of a growth story where I think some of the other names that we've talked about have had high growth numbers that could go higher.
Yeah, no doubt. Just before we get out of here, I guess let's touch on Apple for a second because I just alluded to it. So obviously they launched this iPhone 16 and 16 Pro that it was meant to be Apple Intelligence. I thought the advertising was pretty disingenuous. Really, I have the 16. There is no functionality on there. They're shipping this update, obviously a software over-the-air update on October 28th. Let's see what they have there. We know there's not going to be a whole heck of a lot. So I guess the optimist would say, well, it's baked into the quarter just ended, right? And we might see a really nice holiday season if this thing gets good reviews. I'd just be hard-pressed to think that the reviews are going to be that great. So just give me a minute on Apple and what you're expecting here. It doesn't have to be into the print, but just in general, as far as what we heard about builds, what we heard about, uptake of this thing. And, I guess as a customer, you had no reason to upgrade. Maybe, again, I use the term disingenuous. Going back to WWDC, everything we've heard from them seems a little disappointing and very un-Apple characteristically.
So my sense is that Apple, from a stock perspective, is in a good position over the next 6 months. And part of the reason is that the update that's coming on the 28th, that's going to add some like generative text features, some better search features on the phone. But think of that as if you're going to look at the 100% of these Apple Intelligence features, it's like 15% of it. And then we get another tranche kind of at the end of this year from some expanded Siri functionality, not the full conversation, which probably brings us up to like 50%. And then that last update that they're not saying is going to come out until March of next year. So this is a long ways away, is going to be the other kind of 50%. So this kind of staggered rollout, I think it's going to create this battle, this battle line on the stock. Is that if the numbers are good, let's take the numbers are bad, that there's some disappointment. Those build numbers, you see them kind of plus or minus, more on a few percent minus side. But if the numbers are bad, I think that the bulls will say that, well, you just wait. Like these features are going to come and they're going to get excited. And if the numbers are good, then they'll say, you just wait. It's going to get even better. So they've got like this get out of jail card going in the next 2 quarters. And so I think that now I'm a believer that there's real substance behind this. I think people are going to love these. I think ultimately the iPhone over the next in 25, fiscal 25, I think can grow at 10 to 15%. The street's at 7 or 8%. And for 26, I think it can grow at a similar level. The street's at 8%. So I think this is still going to be a great year, even if people don't care about these features. There's just, you hear the bulls talking about this big upgrade cycle. It's real. I've modeled it out. They got 300 million users. That all that excitement that they had, all that growth, 2021, iPhone grew at 39%. It just took off. We were all at home buying iPhones. They're all 5 years old or getting to, they'll be at 4 years old at this point in, or 5 years old in fiscal 26. And you can see some of those upgrades getting pulled forward. So I'm optimistic, and this is going to be a fun one, Dan, just to see how this
Yeah.
one plays out.
Well, no, that all makes sense to me. I just say, if I can have the last word for a second, I've been saying this since June. I just think that if you're going to upgrade the phone, or if you're modeling upgrades for, for the phone for Apple Intelligence, then it's going to be a disappointment, in my opinion, in 2024. And I think it's going to be a 2025 thing. So the later we get in,
that I 100%
so
agree in it.
yeah,
Yep.
so I
That
think
makes sense.
2025, you probably have the move, or at least the upgrade cycle that folks thought. But until it's demonstratable, until it gets good
Right.
reviews, until we can
That's
trust
fair.
Siri with anything. So, all right, well, that's my two take. I know we went a little late here, Gene. I really appreciate your time as always. I'm sure I'm going to see you on CNBC's Fast Money this
Can't wait.
week, going through Netflix. Again, he is the managing partner at Deepwater Asset Management. Deep Tech 315 is the podcast every Friday morning. Go follow it, people. We'll put a link into the show notes here. So thanks, Gene. Really appreciate it again.
Thank you, Dan. See you soon.
See ya.